All right, it's 6:30. Good morning, my dogs. It is November 9th. It is Thursday. My name is Scott Redler. I am the Chief Strategic Officer at T3Live.com. Welcome to the 6:30 Club, where I try and find some ways for us to make cash flow, set ourselves up for the week, talk about routine and process so we can set ourselves up for life, because you have to have a routine you like to do it every day. Otherwise, you're not prepared for what this day brings. And I will say today was a little tougher for me to get up. I had to go out last night in the city after doing a segment with Liz Clayman. And my boys came in from Westchester, Long Island. My friends turned 50. Didn't get home till late. So when I woke up this morning, I heard my alarm go off. And I'm like, let me just press the snooze button. And I'm like, no snooze button. You go out the boys and wake up like a man. Get prepared. I wasn't on my desk. Got to get the charts updated. Got to get ready for the day. Anyway, so with that said, I'm a little tired. Red Dog's allowed to get a little tired. So people like, Red Dog, what's happening with this market? Are we digesting or are we stalling? You know, a lot of people are talking about, the breath, not the breath like you breathe, but like the BREADTH of the market last week, where you had a lot of sectors participating in that big push. And now it seems as if some of the small caps, the energy, the banks, everyone thinks coming in a little bit more than tech and, the mega caps that have been doing a lot of the heavy lifting. So with that being said, you look at the chart here of the SPYs and you'll see that, you had this fast and furious move, which wound up hitting 438.09 yesterday. And you have this little 4-day range. It looks like a small accelerated channel, where sometimes if that accelerated channel breaks, you get some kind of shaking of the tree. If that were to happen, the bears would have to have it, or the sellers would have to have enough power to break it below this 430, 487, okay, which is right there. So sometimes I'm just like, you want to simplify it. You can't get too bearish if we wind up holding, this 430, 487. I actually did a pretty good job, I have to say. I can always say that all the time. The last few weeks before that, and the last month, I wasn't doing a great job being short. I was out of the way, and a lot of people like, Red Dog, you're not a good short. Why aren't you short? And bottom line is, I'm a better long than I'm short, and I'm better at active sequences to the upside than to the downside. It's just my nature. I try and make money short here and there, but sometimes cash is a position too, and so is brain capital. So anyway, what I tried to do is be long some swing positions from last week. Probably somewhere around here when we took out this 416 to start this upend, and then right around here I started selling premium higher. So what does that mean? I would sell strikes. Like right now the SPYs are trading at 437, 82 at 435. I'm selling 437s, 438s, 439s, taking in like $1, holding the SPYs, holding like a Microsoft, holding a Meta, holding an Apple, holding some other one-off type trades, and collecting some premium and staying long, versus a few years ago I used to have like 7, 8 positions in an uptrend, and I would be short the SPYs as a hedge, and the SPYs would go up and some of my positions would be flat, some would go well, and I'd be like mitigating things. Now I'm kind of doing it strategically, where I'm a little bit more sophisticated, where I'm in my positions, and like just say today the SPYs are 437.80, okay, which is below 438. So what the next resistance area is just say 442. So what you could do is you go out for next Friday and you sell the 442 calls. I don't know, just say the premium's $2. So you're selling them. So then if between now and next Friday we see 442, all of a sudden they take the time premium out. You get paid to be long, and if you wind up correcting a bit, you then you make some money on your hedge, and who knows, maybe you have some stocks that outperform. I started doing that around here, and if you do the right strike and you're not too in the money, you could make money with your shorts, and it'll give you a little bit of a wherewithal to stay with some longs. And so far, I feel like we've had a really nice move, and for me, which was necessary, probably netted money, good money, the last maybe 6 out of 7 days. Remember, like 2 weeks ago, I came back from Ohio State and I watched Creed, and I haven't seen it in a while, and it was freaking Rocky and Creed. One punch, one round, move forward. I knew a lot of people a few weeks ago, they were a little battered and bruised. I'm like, guys, face your P&L, know what you're down for the quarter or for the month. Don't say, I can't look, face it and say, hey, you know what, day by day by day, I'm going to try and net money, make the right decisions in the right conditions, and all of a sudden put yourself in a position where you're making progress. And I think a lot of people have, including me. Yes, some of the pros could be off their high water mark, and I was off mine. So anyway, again, here's the SPYs. Little ascending channel here. If this were to break, maybe they shake the tree and test the 433 gap of 430. If not, we could stair step all the way up to this area if that's going to be the case. A lot of people are like, hey, Red Dog, what do you think of the IWM? Well, here's the thing. Okay, I remember when I pointed out this head and shoulders top pattern in the IWM back here. Remember this channel we were in? And we had a head and shoulders top pattern, and then we broke the neckline to 185. So it was like 198 to 185 was like 13 points, and it kind of got us to measure and move down to here. Well, now some people are like, hey, Red Dog, doesn't this kind of look like an inverted head and shoulders pattern? And I'm like, yeah. Remember last week in the 630 Club, on Wednesday, I'm buying the 166 calls, and then I rolled them up to the 171s, but whatever. Now, if this is going to be the right shoulder of this inverted head and shoulders pattern, you would think this 169.30 holds. Right now, the actual small caps are up a bit, outperforming the SPYs, which is good to see because they've underperformed, and that's because energy and the banks and things have pulled in. So with that said, I went out and I rolled into IWM calls for the Friday after Thanksgiving, because that week tends to be a pretty bullish week. So after digesting for a little bit of retracing, perhaps we turn up here, and then if this is going to hold and we build, chances are we take this out and could see a Santa Claus move into that spot, and that would be halfway of this weekly channel and still nowhere. Like, look at this weekly channel. This is just, this is a whole lot of monotonous nothing. Everyone's all focused on the small caps and focused on, finding the value trade or the rebalance trade or the this and that. I like to usually stick with the leaders that are working besides this. But anyway, so here is on the weekly chart, one spot, and then this would be a spot that just takes you halfway back into this channel after a little bit of an overthrow to the downside. Remember here, we got rejected and then came all the way down, went a little bit below. Now we're about above, and this needs to hold to continue. Anyway, I like to look at weekly charts because it gives you a little perspective of what's happening here. Anyway, what's been working though is mega cap tech, and sometimes you just got to jump off the train. Like I jumped off the Microsoft train. I know it can go higher. I just wanted to book it. Here is when it's set up. Here is when it triggers, and now 1, 2, 3, 4, 5, 6, 7, 8 days up. Wow. What was yesterday's high? 364-ish. I didn't have it yesterday. I sold mine on Tuesday, so I got out here. So that was a nice swing trade. I made really good money in Microsoft. So I'm looking for setups. I'm trying to look for things that are still tight that I could have defined risk against. Not, sometimes people are like, Red Dog, I'm just going to stay with it until it finally trades below a prior low and closes below a prior low, and then I'm going to get out of the way. I mean, that's a good idea, because then you're just riding the trend, and look how it's above the 8-day moving average. But anyway, some things I'm still watching. This Meta, I still think, has a nice little pattern here. Channel going sideways. You could be long versus 315 at some point. Maybe it takes out this 321 and this 330 area to get. It's been in a channel for a long time now. It came out with good numbers. If you remember, 2 days ago I bought Apple. Okay, I don't have Apple on now because I sold it yesterday into that strength. Apple had a big move. Remember I was buying it on this day, saying I'm going to buy it versus the post earnings low, and then I added through this spot, and all of a sudden it hit a high of 183.45. So it's a lot of green days. Again, you could, like a Microsoft, you could put a stop in a certain area. For me, I was like, you know what? It's a little bit overbought. I could just take it off. I don't have to hold 20 positions. I could hold 4 or 5, so I don't get a leg sweep when or if the market decides to change a little bit. But it hasn't. Either which way though, Apple is looking good. I mean, it's still in a call spread, but in here I bought the 180s, and then at 182.5 I sold the strike higher. So now I'm just going to sit in it and let it max out as they disintegrate the premium. And if it pulls in enough, I'll rebuy it back. Right now, Apple's down a little bit. There was some news that their favorable tax structure in Ireland isn't so kosher. But maybe, who knows? Maybe now you could go like this. Maybe it holds this spot. If it holds this spot, it doesn't really matter much. So 181.59 would be a spot. If Apple wants to absorb this news and go green, I would think Apple holds this 181.59. All right, so I'm not sure what the news is on Tesla. It's a little weaker this morning. It's still in this range. Tesla is not leading. When Tesla doesn't lead, you have to be very careful with Tesla because it's a high valuation name and it's a little bit of a battleground these days. It's still holding right here. For some reason, it feels like there's like sellers in the morning and then it wakes up in the afternoon and makes you think you're going to miss something, and chances are you don't. So we'll see what happens here. Right now, it's at just a 2. It's actually down 275 at 219-ish. So see how it goes. I'm actually long a little bit overnight because I was trying to figure if I could stay with Tesla. In this inside pocket pivot, maybe I'm engaged enough to get a trade for when it gets above this 223 area, which doesn't look like that this morning. So if you are in this, just make sure you have an out. 217.64 will be my out. If it breaks below 217.64, I'll just get out of it. It's not a big deal. It's a trade, Sometimes you have an 11 versus 6, and you're like, oh, I'll double down on blackjack, and you get a 3, and you turn it over, and you're like, oh, shoot, I should have got a face card. And then you're like, okay, the dealer has a 6, and then he turns over a 4, gets a 10, and then he takes your money, and you're like, okay, it was a good setup, didn't work. This seemed like a good setup. It wasn't a great setup because, you have stocks making higher highs, stocks on their way back to weekly and monthly highs, and Tesla's still lagging. So it just shows you, you have to be smaller in something like that. I will say yesterday, Square was a great trade. Remember we talked about Square, your post-earnings gap. I got long verse 48, added to it, and then yesterday did get above 52.13, hit a high of 53.05. Yesterday, while the market was pulling in, it actually showed relative strength. So I actually bought some options going out a week just in case. And lo and behold, it's pretty nice. This was from yesterday. Square had a big pro earnings gap. I did buy some verse 48. We'll see if it digests and tries to clear 52.13 in time to add more shares. And that's what happened yesterday. That was a nice trade. I haven't been in this name in years. All of a sudden, Red Dog, it's got a pro earnings gap. That setup's been working. It worked in Amazon. It worked in Netflix. It worked in ANET. It's worked in Shop. Meaning, a big pro gap wakes up the stock. You see commitment to the stock, and then it creates a swing trade. So I am still in all of it. We'll see what happens here. Where's Square right now? Square is hey, look at that, up 60 cents. Isn't that nice? Isn't nice? Anyway, we'll see what happens from here. It has room to the 200-day. You look at the weekly chart of Square. This stock's been absolutely annihilated. By the way, you can learn from weekly charts. Like, look at this upper wedge that broke below all the moving averages at 236. And then what? Look at below the 8-day this entire time. That means it's a not touch. That means it's in a bearish trend. That means you're staying away. Remember, above the 821-day, you could be long. Below, you're out of the way. So P.S., this is where Square is. So am I asking for too much for a move towards 60, actively in a new active sequence? And we'll see. Maybe yes. I'm going to try and stay with it. I'm going to manage my size. Some people are in Shop with the same type of, setup where you have a pro earnings gap. Okay, held 59, showed some relative strength yesterday. Now it looks like it's going to break this descending trend line, right? I'm actually still in Palantir, kind of similar, a little choppy, but it's had a big move. If you look at Palantir, it's holding. My stop is 1776. If it can get above this 19, maybe it makes a move towards 20. It's a very thick stock, all in all. Nice big earnings gap to trade verse. It's defined. As long as it's defined, you could stay with it as an active trader. I haven't looked at the weekly chart in this in a while. You look at the weekly chart in Palantir, and it's, let's see, hold on. So I gotta draw my lines. Remember back in the day when this was a great trade? I remember having this trade early. Anyway, I guess it could work its way back towards this spot, perhaps I'd say into next year. But I would think have to hold at least half of this channel. Anyway, that's the weekly chart. But remember, this broke 24 all the way down, and then it started acting better, and then it just consolidated nicely. So hey, maybe there is some room there from the weekly chart. What's it called? Again, you could have your stop here, and there's 1908. So it's just a setup. I did try and trade Datadog yesterday, and not the end of the world. It's a little choppy. That's why I don't like to trade this group, because it's choppy. Some guys are inverse 96.17, and you want to give it some time. And then if this wants to, stay in the game and open the door for higher prices, it's got to hold here and then take out 104 and change and work its way towards 117. Maybe just needed a little bit of time. It was choppy yesterday. And then you have Bitcoin. Wow, Bitcoin's had a big move. They shook the tree a little bit yesterday, and now it's on its way towards that 39,000, which was my target a few months ago I put for the year. If you're an active trader, it's done really well. Look at that. Boom! Look at that breakout. Never violated this spot. Here's where we had a lot of BITO, B-I-T-O on. Again, I don't think you should be going nuts in altcoins unless you're just trading them, loving them and leaving them. But as far as Bitcoin itself, I do think long term, it's a viable asset class. Just Bitcoin itself, kind of like gold is. If you have a, the pie chart, and like you have 60% stocks, 20% bonds, 10% gold. Well, you should have 10% Bitcoin also, something like that. If you trade it technically, Bitcoin's been above the 8-day moving average this entire time. Isn't that great, right? We like to be long when it's above the 8 and 21 day. Same thing for Bitcoin and some crypto. Some guys are like, hey, Red Dog, what about coin? Yeah, you know what? Coin, if it gets above this 88.34-ish, it's tight. I don't love the way this thing trades, but has a pretty big short interest. It's probably one of the only exchanges you could trust besides, I don't even know what else. And where's coin right now? It's probably up like $1.50. Ooh, $3.50. Look at that. It's nice if you're in it. It's nice and tight. Anyway, we'll see how it goes from here. So anyway, it is Thursday. It is November 9th. I hope everyone's been managing their process, using a tier system, meaning netting money and letting runners run, perhaps hedging, not over hedging. And if you happen to have missed this move, at this point, it's hard to chase, hard to short. Just make sure you can approach a setup responsibly and have your defined risk and continue to net money. And long term, I was on yesterday with Liz Clayman, this guy Art something or other, who's talking about I don't know, talking about the stock market over time and how against inflation, it's really not where it is and all this kind of stuff. Now, listen, bottom line is if you have a long-term approach and you have a job, and you also trade and you also want to, prepare for the future, just max out your 401k. He was talking about the 1987 crash, and he was talking about the financial crisis of 2007, 2008. I'm like, yeah, those were definitely very complicated times. But if you put in flows and max out your 401k every single month into an S&P fund, those high volatile situations is what creates your average cost, right? If the market drops 27% over 2 years and you buy every month on the way down, and then all of a sudden it rallies back and makes a new S&P all-time high, that's what creates your average cost over time. So substitute a little bit from now for later, right? What's that? The marshmallow test. If you say to a kid, hey, you want 1 marshmallow now or 2 in tomorrow? Some of them will be, I want 1 marshmallow now. And the smart kid's like, oh, I'll take 2 tomorrow, so I have 1 each day. Anyway, sacrifice a little bit, which is what investing is every single month. And if you trade for a living, you better be prepared. You better have a strong process, because it's the only way you're going to think clearly and execute with confidence. Thanks for tuning in today, guys. I appreciate you. Have a good day.